Okay. So somebody asked me a question here because I made fun of this. I just have too much fun making fun of stuff. Order flow is rubbish. I'm up to almost 4,000 views on order flow is rubbish. And the word rubbish is a real trigger for these people from Britain, apparently. And order flow, oh my God, you're talking flowing orders. So, again, it's interesting the runs of thumbs up, the thumbs down. I'm liking the, a lot of thumbs. So it's equal opportunity, two-way street. So here is my answer to the question. I just really, boy, I really, people really get triggered. It's a trigger happy situation. So the guy says, I think it's Jean Claude Van Damme. I gotta scroll down now. I lost it. He says, we get your point. As far as, order flow's rubbish. How do you time your entry? What is your edge if you think the market is random? Now, this is the old random walk theory. I think this is 30 years ago. So I had this, the first time I got married, I had this brother in law that I think I got better along with the brother in law, my wife's brother, than my wife's. So, of course, then we were accused of being in a homosexual relationship because we were having too much fun. We both saw the world the same way. So he said he was going to trade options. Now, this is just when I started trading, and I thought I was pretty good at looking at a chart, and he said, well, options is, just the way to go. But then he kind of detuned it by saying, well, you're betting. But he talked about the random walk theory, and a lot of people, it's random, it's not random. Okay, it's random, but we can all make it's randomly going somewhere. So this Wolfram project demonstrations is interesting. I came across this about a year and a half ago maybe, and you can just dick around with. If you can do that, you can do the just play stuff out in your head. It's like playing a game in your head of what'd you buy, would you sell, and without too much. You should be able to imagine yourself buying and selling, I guess. So imagination is how I'm imagining next week what's going to happen without regard to the artificial intelligence bots that are going to try to guess what's going to happen. I'm going to try to guess what's going to happen, and I'm going to try to place orders based on what I think is going to happen. And, of course, timing the market would mean also deciding when to untime the market, let the order. So if I put an order, like say 100 pips deep, now this is the crudest example without a chart, is just imagine you put a sell limit 100 pips above you and a buy limit 100 pips below you, completely disregarding anything other than the fact that you are putting a symmetrical distance between where that you are right now. So orientation is very critical to anything. The old map that you come up to on the side of the wall, which I always thought was clever for them to put that little arrow that says "you are here." That was just brilliance. when the guy put up a map on the wall, and the other guy said, and where am I on that map? So where in price structure am I? Well, currently everybody's map is the same at the end of now the monthly map. At the end of the week, everybody's sitting at the same price, and we're all sitting there, right? This is kind of like a given, and the future's unwritten. And actually, where you're going to be on that map later on, well, it's always going to be to the right edge if you're going to do typical. Which you'd have to call, I guess, lie detector charting, right? The market, the plotter's moving But I think in some regards, what's going on in these markets is, if you can imagine that you're on a bridge and the water's getting closer to you, you just assume the river's rising. But maybe in the end, what's happening is that the bridge is sinking, um, or the bridge is rising. Looks like the water's sinking because maybe reality, maybe current time is always current time, and um, the price isn't moving, but events are moving around the price to make the price different. So, especially in forex, because if it's a euro against the dollar, then in essence it's really just vibrating up and down. You're putting a directional spin on it based on the biggest price pulse you've seen so far in one direction for one um, time frame. So if you can imagine a plotter, um, where the paper's moving, the pen stays in one spot and the paper's moving underneath it. So if the market could be either way, right? Because you're just trying to plot it as it comes at you in real time. Now the Renko chart is going to compress and take out, or a point and figure chart's going to say, well, we're waiting for this much movement before we even consider it to be plottable. Whereas in a real time, if you have a 1 minute chart and you see dashes, so I used to watch these commodity charts, and I mean, literally, you could have you'd think your data feed's down, right? Or you get a bad tick for real, and it was just like, wow, it just destroyed the whole landscape of this lie detector chart. So the guy earlier today with the comments about all his digital filtering, I just thought of this, the computer that wore tennis shoes trying to trade kind of scenario. But I think we can go way beyond that, just in sheer terms of what is. So he said his robots, his artificial intelligence, is going to give you the upcoming projected volatility. But it's so complicated as far as, in other words, it's not complicated. It's just a math thing as far as how much money you need in the account to do certain kinds of trades. And so I say there's kinds of trades where you have a very wide stop just to make a little bit of money. You have to have a trade like that in there. I mean, when I say wide stop, it could be a 3-pip stop to make 1 pip. Is 3 pips a lot of risk? Now, if it's a very small trade, no. So if you really are going to have a robot trade for you, he's going to put on trades that you just wouldn't bother trading. You're not going to, well, you don't need a robot. You could just press a button and make 10 cents per position, right? 20 cents per position, 40 cents. Now, just duplicate that 1,000 times and you almost, at some point you're talking about real money. The idea that you're going to trade, sure, you can make $150 per trade. You can sit there and trade the ES Mini and say, when I make 150, I'm getting out. Or when I make 50, I'm getting out. You can do that. It's now, that's a lot. You're basically sitting there having to watch that happen, I suppose. I don't think this. I'm assuming you're scalping. Now you could make $150 in the ES Mini, having an order that as a pending you put out there, you never have to watch it play out because it either that theory works or doesn't. And theoretically, if you believe in, I guess for a better phrase, a stop hunt, if you believe in markets moving, how you get into that move. So do you board the train on the do you get on this train here in the direction it's currently going, in the order flow it's currently going, or do you place orders deep in the market or deeper to get filled. And I'm assuming for reversal, the deeper your order, the more it would just logically, or I guess you would just naturally think that it's going to be reversal. And you're going to trade some counter trend or some price pulse coming back off of a deep sell or a deep buy order. Because otherwise, why aren't you just riding the train into that deep buy or sell? And you could also indecisionally get in the market. So you would just get in because, just like a goof, it looks like it's going up. But now you're not in big on that trade. The thing was, how much size would you put on say, this high probability trade? You know, size up bigger on that? Maybe. Maybe not, because you're trading so much now in all the trades you do. And say when you talk about an entry to the market, imagine multiple entries, imagine multiple trades, imagine spreading your risk. So here's the demonstration. I'm going to download this and run this random walk thing. You've already got it, but what the fuck? Download it again. You got to download the player. Instead of a PDF, it's a CDF. And I think I've got this one loaded. I did a video about this maybe. But it's still fascinated to the end of the earth on this. Because this is kind of like, imagine you're going to trade this market. You can see the double tops, the double bottoms. I mean, it's all the same thing. It's just, and this is an explosion, and you're speculating what is going to be the approximate confidence intervals, you know. See, here you're staying inside this. I don't know if I guess that's not changeable. So we have more than one path we could get there too. Now they're both. This looks like now you're running two currency pairs that are kind of correlated. And now third currency pair. And it's funny because it looks these completely rant. Now if I do the steps, and now this is just how many more zigzags. And wow, the correlations there. Which currency should I? This is the funniest thing I ever see in my life. Is, well, what we're going to do is we're going to pick the strongest currency pair. Okay, I'm with you so far. You know, really? Okay, well, I'll ask you the same question on any currency pair that you think is the currency pair to go long or short on. Is, do I get in here? Do I wait? Do I go hog long in the next 40 milliseconds or the next 40 minutes? Should I place a pending actually against my order? In other words, I want to buy, but I'm actually going to put a buy order 10 pips deep. Well, shit, why don't you sell for 10 pips into your buy limit? I mean, the first question I think that it would ever come up for anybody, isn't that the most... Is it just me, or is that the most logical next question? I'm going to presuppose logic and reason, some important aspect to your brain that keeps you from fucking going nuts, right? From punching people and on and on. Let me put some more seeds out here. Ooh, a lot more seeds, a lot more. Oof. No, wait a minute. Back up. I like it right there. Wait. Oh, this one here, now you come to your screen every day. It's like, oh boy, well, what we got? So I'll be thinking contrarian with this strength, but still, it doesn't let me off the hook of how in the fuck am I going to get in that market? If I think this is a buy here, where it's overextended, or maybe I think, this is the strongest currency, I'm going to go with this one. How would this matter to how much money you would make and how much money you would risk and how much time you would spend and What time of day would you get in, and would you wait for the market to come down just a few more pips to get a better entry? In the bigger picture of the big target that you see is the move of moves. You're going to counter trend, enter into a trend. Are you going to scalp for that first little burst to take something? You're up $1,000 or you're up $100. Should you scalp out and get back in? Okay, this is the problem. You have to trade so much. It's like playing guitar. You can't ever say, okay, I played for 40 minutes. I mean, it's hilarious. Like, I'm almost surprised I didn't see people show up to audition and say stuff like, well, I charge by the lick, or I charge by the note, or I charge by the, every 10 minutes, man. Like, if you hear me on playback, if I'm playing, I want to be paid. Like, literally, there's a meter running. Like going to the shrink. It's just like, you've got to be kidding. Because, so I just watched this chess game. This is Bobby Fischer kills this. Well, the guy resigns out of the chess game, but listen to the guy talk about the chess game. There's imbalances, and then everything crashes in there. So you're kind of trying to win the game of chess. You're trying to checkmate the guy. Now that would be your target, maybe your ultimate target. You're like, well, we're going to go to $1.20. We're going to go to $1.40. We're going to go to $1. We're going to go up 10 pips. Now, if 10 pips is your ultimate target, or 20 pips, there's got to be, it can't be a straight line since the market's vibrating. So the question is, do you take something off the table along the way? Hell yes, because you'd be out of your mind not to. So the holy grail of trading is scaling out. I mean, now this guy's a very disturbing picture of this guy. Guys, got to get off. So let me go to a pleasant-looking young lady. I just discovered this girl. Her name is, oh geez, what's her name? Anyways, she's shit. Her name is Jessica Schaub. So she's people wanted her to be a cult leader and stuff, and it's just so cute. She's just adorable, and she's like, leave me alone, I'm not a cult leader. People wanted to make her their guru. Very interesting. So here, I'm going to go for the maximum amount of currency pairs. And, okay, so, let's see, where was I? Oh, so, basically, even if you said this currency is going down, I should have sold here, great, but you could have sold so many places along the way, and the trade could have lasted just a little chunk. So fractals do exist. I mean, the little trade you're taking is, that's the thing, right? The trade that you're on now, if that trade is, and this guy asked some position sizing on his artificial intelligence, he said, well, you have to do a percentage of your account. Well, that's it. That's the deal. The percentage of account is the issue. In the end, that is all that matters. Because there's a pain threshold for how much money you're going to risk or reward, because you would feel that at some point if you lost all your money that you have in your life. If you don't mind losing $100 a week, that's trading is pretty much a comfortable task. If your threshold is like, if I only lose $100 a week, I don't mind trading just for fun. Imagine you had it on that type level of risk. So your worst case scenario is you lose $100 a week. Now, you could lose it in one day on one trade, or you could wait. You could just lose. If you set your trigger pull to $10 a trade. Now, this is presupposing you don't mind trading with a 100 pip stop on a 1K. Now, some people would say 100 pips stop. That's kind of wide. I mean, it's so funny. This guy that was fighting with me, this guy Calvin Klein, he doesn't just design clothes. So he just, if you trade with 100 pips stop, it tells me everything I need to know about you. Well, it just says that I want to risk approximately $10 on a 1K. Because I'm like, I'll give this market some room. Now, if I placed 10 of those in there, and I bought every 10 pips it dropped, I put a penny to buy every time. I'd risk $100. Right, so would you risk $100 on an idea that you wanted to buy the British pound? So you buy one at the market, and let's say you put a 50 pips master stop on it. So the very top ticket there, you're going to risk 50. The bottom ticket you risk 10. Or you put a 60 pip stop, and you're going to buy 50 pips deep on the last ticket. So you can put a 60 pip master stop on all these tickets. Now, as the market comes down and down, and you're like, oh, God damn, I'm down like $50 on this trade. I can't fucking believe he told me to buy this thing. I'm also presupposing that if the market drops 50 pips, you're looking for it to bounce 100 pips, which would be double. We've seen these moves before. Market drops 50, then it goes up to 100. Now, you simply scaling into that is a psychological skill set of pain, if you don't mind being underwater for this $6. And it just keeps adding up and up and up. And you're like, Jesus Christ, is this thing ever going to go? Like, when is it going to go my way? I don't see how that's any different than now if you bought really if you say so what another thing this does for you. In other words, to get around, you have to get around stuff. You're never going to be the way the book says you should be. So you read a book. This is what I thought. You read a book and it's like, oh my God. I mean, if that guy in that book can do it, I can do it. And I do it just like he does it because I don't want to fuck it up. So I do that and I'm like, God, this doesn't feel right. There's something doesn't feel right. Yeah, because it's not my my idea. And I have problems that I've already come to the party with. Like before I read the book, I was already out of my mind. So I already had my own idea. My ego was so big that I kind of figured, well, what can these guys tell me I don't already know? I was like, okay, let's see it, man. Bring it. Then I thought, well, they got letters after their name, like they're PhDs, so they must know more than me. And this is just kind of the basis of most stuff. Well, if you want to know that, you go to, my parents used to say, well, you can't play piano unless you take lessons. I thought, well, I already know how to play it. I made sound come out of it. What more do I need to know? I was ready to go. They had a different view of that. You just don't just play piano. You don't just trade the markets. No, you need some tools. Okay. Well, maybe you don't, because a lot of the people that trade just on their gut and make a ton of money, And I guess if you're trying to look to increase your profits, then you would go down the road of, well, let me get more analytical. Let me get more theoretical. Let me get more statistical and more filterable and more, I need to see, like even this, I'm surprised the guy didn't talk about the neural network, the thing that goes out and looks at news headlines and try to decipher, well, looks like these are trigger words for really? Dude, the Earth's not flat. I mean, really? Like, you talk about marketing bullshit, like just churning out garbage. Like, this is if you can't. I mean, you can never get away with this in the real world. Like, you couldn't have car repair, how to fix a car mystically, how to will your car to start. It's just, it's not going to happen. So we all get sucked down this thing of like, well, if I just knew one more thing, I'd be better. If I just ate one more better healthy meal, I'd be better and healthier. So depressing. in a way to try to just over tweak something. Okay, so getting back to the trading thing. Now, it's you can find more clever ways to make money, um, but I think you have to free yourself from this idea that one entry is better than another. If you wait long enough, a bad trade will become a good trade. In other words, so this scaling in idea is accepting. Sorry. What I wanted to say was the. So why have a trade plan that's not in the book? Because you're like, you know what? If I just go like this, and I just buy every 10 pips it drops, and I don't mind being underwater, because this is the horrifying thing of life, that you buy a house right at the top of the market and then you're underwater on the mortgage. So if you look at underwater mortgages, which means you owe more than the house is worth, this is a bad situation, from a safety equity mindset of security. And why would you want to trade securities unless you want to feel secure? And why would you want to have money trading unless you wanted to be, this is the one that you used to sell on TV, was that you're financially free or something. I can't remember what they call it. Financial, oh gosh, I don't know. You quit your job. But the problem is, as soon as you quit your job and start trading, you realize that trading's a bigger job in the sense that, well, it's more powerful tool to make money. So therefore, there's more responsibility, because it's also a deadly tool to lose money, because you could either make a mistake trading that's just unforced error. In tennis, they have unforced errors. But you could be like, oh, I meant to buy, sell, and buy, hit buy. So I've been experimenting with hedging lately, and it's just this psychologically disturbing, because what you're doing is saying, I don't know where the market's going to some extent. And, well, then why are you trading it? Because I'm not sure. So is it okay to not know? It's just a deep topic, trading, because you're dealing with people's. Nobody would come to trading unless they weren't somewhat intelligent, because just to find yourself to the internet, you'd have to have some kind of curiosity, or you'd want to be able to learn. So this idea of teaching, trading, and all that stuff, but it's really it's always something you got to do yourself. So you got to open up your trading account with real money and fake money, or whatever you want to do to experiment, because you'd be no different than if I showed you how to play Wild Horses by Rolling Stones, which I don't know how to play, but if I knew how to play it, you'd play it slightly different than the album maybe, or you're either going to replicate the album exactly, or you're going to do your interpretation of Wild Horses. And so what's best fit for you? Well, some of it actually, since most people aren't trading for a living, and they're trading maybe for supplemental income, and so they don't have to make money trading. There's a big difference between that's your only gig and it's a backup plan. It's a whole different mindset, because it's more casual to have a day job and go, yeah, you know what? So people would say, well, I dabble in something. Like I play piano, but I don't play piano professionally. My life doesn't depend. Nobody's got a gun in my head saying, you better write a hit song. Now, if I had to write a hit song, I would write a hit song. Like if I had to, I'd be like, I know how to trigger people. It's Tony Robbins talked about this. Why does Phil Collins have these hit songs? Well, he's visual, he's kinesthetic, and he's auditory. So he has audio in there, he has visual cues, and he has a feeling to the music. So he's qualified those three categories, and people are attracted to that. And it's just a stupid game. Same thing in the market, kind of, I guess people feel triggered and compelled to trade. Now, this Urban Forex Trader talks about this, which I I agree when he did this thing called the rubber band. I agree with him in the sense that he's talking about, well, the market's going up and people are chasing it. That's true. People are chasing it. Not everybody's chasing it, though. Some people are looking to go the other way. They can see that, hey, you know what, this is filling a void, and once that void's satisfied, we're probably going to back off, back off Yosemite Sam trade. So the thing is that and besides which, are you the kind of person that can get into a accumulation phase? It's going up, down, up, down, up, down. You realize, okay, this is pulsing. Is this enough for you to ride the 8 pip volley? Are you the guy that's going to scalp the 8 pip noise? If you're the guy that can hold through the noise, you're a trend trader. If you're holding a position that keeps oscillating, almost just linear, literally like square wave, just, stupid, right? When the market does that on a larger time frame, and that would be called swing trading typically, but those are micro swings going on in this in a trench before a big move. The big move is a lot of people's targets, and all the hemming and hawing and all the she loves me not before we make a move is either you're buying every dip and you're accumulating at the bottom of that range buy. I did that one night about 4 months ago. I was in the Eurodollar, and I thought, God, we're going up. I mean, really? So in Asia, we come into Asia and it just kept oscillating. And now when you go into Asia, there's a fork in the road. For every market, does it continue in the last price pulse, or is this the time it starts to retrace? So are we going to continue at the end of the day? Is it going to be another day up, or is it going to be a pullback at the end of the day? And typically Asia would be the pivot. I mean, this is when things congest or things consolidate. There's a flag, typically. Just the nature of Asia, right? It's dead in the water. And do we continue? Or do we drop back? Do we retrace up or down from this a tremendous trend day? So, what do you do about that? And really, everything is about what do you do about it. And if you're in the market, now if you get in a kind of you don't care which way it goes, and you're like, well, it looks like it's done going down, it's going to go up, or it's done going up, it's going to go down. So incrementally, though, I think if you had to trade for a living, if you had to depend on it, you would have to see that there's times when there's customers that come into the store that are only there to get a cookie. They're not going to buy 40 steaks from you. Now, you might have cookies, and you might have like rack of lamb or whatever it is, a big ticket item. But having to survive in a storekeeper, so that's where you have to look at yourself in a way. I suppose that's how I look at it. The customer's always right. The market's always right. The market's doing what it's doing. You have to accommodate the market, what the market's after. Now, you can have these deep pending orders. So like I said, my scenario is the market's dropping, and you're building a losing position. I mean, you're adding to a loser. In the most simple terms, you're putting on your spurs and you're martingaling up. Now, this is not for everyone. But what it does is two things. Even though it's costing you money, it actually, don't forget, the market could retrace after 20 pips, and I wish you would have bought a 10K every 10. In other words, you wish you would have bought more this is always going to be your wish, is that on the winning trades you were in bigger, on the losing trades you were in smaller. You're going to wish that in hindsight of your last trade. But that's just natural. Because if the market went your way, you'd be like, wow, if I would have just bought more. And if the market went against you, I wish I would have put in tighter stops. Or the size you're trading. So if you did so the guy that's the position sizing, okay, you're either going to have a dollar risk, or you're going to do market structure. It's going to tell you how wide to stop. So which is the better way? Well, it depends. Well, it all depends. Because what if you don't give a fuck? You want to just lose X because you feel good about knowing when you press a button, you feel good about, or you drop an order, you feel good about knowing that the worst case scenario is you lose $100 a week, say. $100 a day, whatever it is. You're trying to make $200 a day, I'm presupposing. So, that's all that would matter. Now, if you want to do structure stops, I would still have multiple orders, and I would still have, we'll just keep the size as small as your broker allows. This is how you basically become a burden on your broker. I guess you could become a burden on your broker, which some people would love, right? People love to abuse it. You want to abuse your broker, just trade as small as they'll let you trade. And just put multiple tickets in. Now, of course, if you're, I get it. If you're got $1 million in the account, maybe you don't care. But usually millionaires care about like $5. They wouldn't be millionaires. There's no way you can accumulate. Well, of course that's not true. I guess you could just be some goof that wrote a hit song and you're a millionaire, and you just because you did an emotional connection with your crowd, and they're just getting. In other words, your talent is making you money. But in the market, same thing in the market. You could be so good at waiting for this amazing entry, which is pretty obvious that it's always going to be the same price as the pending order. It's just that you happen to babysit the entry, and it may feel like, wow, I sniped that out. Yeah, but the guy that put the pending in had the same order entry price. So the idea of being a sniper is a joke too, right? You're sniping an entry that, duh, who can fucking see that was like the entry? The edge. Oh, there was a guy that from this 212 markets or something. 212 trading, I think, where there was zero spreads. So they hired some not ugly guy to do the weekly update, so to speak, and he says, well, here's a critical prices for 2018, critical price zones. Now, I used to really think about that. Oh, wow, we get to hear this is going to happen, or wow, this is going to be a big deal. Well, it is kind of funny. It's like watching football games. Man, when they get to the end of the game here, okay, but in the meantime, the whole game through, like, there may be this amazing target and stuff. In the meantime, what the fuck are we going to do? So the fear of missing out is totally cured by the fact that you're scaling into the market. So, now, maybe not every trade's like that. Maybe you scale in on this thing, the other one you're going to do. This is where it becomes, trading becomes more than just playing one song on a guitar. Are you a trader? Now, forget professional. If you're trading for entertainment, it doesn't matter. Yes, you're a trader if you're trading. And, of course, if you are playing one song that you memorized from the album or from somebody taught you the song, and you play it, you're a guitarist. Or you're a guitarist even if you don't play a song. I guess you're just dinking around on it, you're a guitarist. So you're that, right? Now, to be really good at all, like, now you can play 10 songs on guitar. Well, that means you could do, like, I could do a say a scalp. I could do a swing. I know a trend trade. Do you have the psychological wherewithal to be a trend trader? How do you feel about equity? How do you feel about being above water, underwater, above water, underwater, above water? You get out of the trade. Now, do you think it's a bad trade if you're not in profits every millisecond? Now, that as soon as you pull the trigger, your idealistic part of your mind is going to say, I should be up in this trade from the moment I get in, otherwise I'm not a good trader. Okay, so of course if you're trading at the market, let's hope that you don't have that thought, because you're going to be fucked as soon as you get in, because you're down the you're every trade you're fucked because you're down the spread right out of the gate and the commissions, and then the market starts to go against you in some degree. This guy that was challenging me, the guy that was, I never down on it. I trade ES Mini and never take a loss. I'm never down on the trade. I mean, there's no spread. Okay. Wow. Oh, okay. It doesn't, really, it's never gone one tick against you. Nope, not me. I'm not that guy. Look like I'm queer or something? No, never had any guys try to hit on me. Nope, never happened. Never been molested. Nope, never happened. So, you know, so here you are. You're trading this stuff, and I just get so frustrated watching the market behave. And so the other morning, it's like Wednesday, and the Eurodollars. I wake up and it was like out of a bad dream or something. And I looked at the market. I dreamt the market. You ever dream the market trading, and then you wake up and the market's doing kind of what you dreamed it would do for the next. I'm talking about like micro dreams and 40 minutes of napping, and I'm like, oh my god, we're sitting at fucking this price. Like, I think we're sitting at $1.20, 30, 23, $1.20, and I just thought, really? Like, okay, it looks like it's gonna go up. Could we just fucking go up? Like, I get so pissed off. Could we just fucking go up? So I bought and went back to sleep. I'm like, oh God, really? We're going to play this game? And the game was, now it reminds me of a bad chess game where nothing's going on and nothing's happened yet. There's no breakout. They're still setting up the table before they pull the cloth out. And so, oh my God, I just was so pissed off. And it did finally go up. And then of course it went up and I got out because I said, I got my 30 pips. I'm good, or 20 pips. And of course it did pull back. A source when London opens. Here's the typical scenario for most markets. In case you're wondering, the secret to trading Forex is that Asia's quiet. It could keep going. It could pull back. But when London opens, it could totally reverse and go the other way. So there's going to be three ridiculous moves per day. Or there going to be 3 moves per day. Every 8 hours, 8 times 3, it's like almost 24. So that is the market. There's 3 phases. There's 3 things. If you have an 8-hour chart, so you got 3 bars. And I think, right? Yeah, that's right. And 4-hour chart, 6 bars. That's a lot to think about. Or you have the 1-hour chart. And every bar has a trade plan, in my opinion. It also has a strategy. So a small 1-hour bar has a different trade strategy than a big up or down 1-hour bar. I mean, as soon as I see a big 1-hour bar in one direction, I'm like, okay, I see. Now, I can see exactly what just happened. I can see where we're at. You're here now on the map. Where are you now? So let's say you were going to trade the markets Well, what's going to happen tomorrow? Market's going to open at 5 p.m. As soon as the market opens, you can put your pending orders in. Where are you going to put them? Well, I'm going to put them above and below current price and see what happens. Now I can wait for them to fill my orders. And this would be where my fear of missing out would be, okay, well, I'll probably get filled on something this week. If I left the order all week long, now here's about timing the market. Do I let a pending order sit for a week, 100 pips deep? Well, sure, why not? Now, if I put that order in, my brain's psychologically keyed to like, okay, we could go there. Plus, I can live with that idea for the whole day. So the whole week should be laid out in front of you, pretty fucking obvious. That you want to buy 100 pips deep on every currency pair all week long. I mean, this would be the dumbest trade plan in the world, right? And 100 pips above. If you tell us, well, how do you make all that money? Well, every Sunday night I put orders in 100 pips above and 100 pips below, just for starters, just for shits and giggles. And not that you would giggle while shitting, but, this is the thing you would do. And then you go, well, that's crazy. I mean, okay. Now what? Okay, wait. Do you think they're going to fill you? Well, they better, because I don't want to miss out. And maybe you put on a Fibonacci line. Maybe you put 3 orders in there. One's 128 pips deep. One's 110. One's 80 pips deep. And then you put stops in each order. And as the week proceeds, like this thing in front of me, this chart here, is it going to move in and tag that? Is it going to keep going? What if it does? What if it hits that order and just keeps going? Holy shit, then what? What if that's not a good entry price? Maybe I should just make a decision Sunday night and just go, you know what? I'm just going to buy right here with a 100 pip stop at the market. Okay, I like that. Buy with a 100 pip stop at the market. See what happens. Then put a 20 pip deep limit. Okay, now you're trading. Now we're talking. And let it unfold into you. What if it goes up 10 pips? Would you get out? Well, you should if it's a good exit. Maybe you sell into that. And what you come to find is that that's what's going to happen for each person that trades, because nobody can live in anybody else's risk framework. What you consider to be risky behavior, I might consider to be completely. When we were kids, people would drive cars. It was before airbags. People drive cars pretty fast. I drove 126 miles an hour as fast as I've ever driven. And I was frankly a little concerned. I didn't think the car was designed to go that fast. I mean, the car said 160 on a speedometer, but I mean, I wasn't getting any faster at 126. And I thought, okay, that looks like the limit. Let's not go any faster than that ever again. So some people would say, oh, shit, let's do that again. Now, so and then of course, this idea of being wrong and right and wrong is just all tied to this whole idea of using a Gartley pattern, because why would you use that unless you wanted to be right about, more precise about your entries? So now you're battling this precise entry idea. So the timing the market now, just to give you this view of the market in sense of 2 pips. Now, there's brokers that will give you like near 0 pips entry, and that's very tight, right? So 2 pips is... somebody emailed me about, hey, those 2 pips. Now, if you're scalping, 2 pips is a real big deal. So I made up a spreadsheet here of, because I was going to make some scripts based on a 1/10 of a pip numbers in the script, trying to get a curve that's more smoothed out using the power of the incremental fifth decimal, which is kind of fine-tuning the entry. So here is the spreadsheet of the top. I've got the white line is the bid in the market. So here's the bid, and this is every stripe. Here is 0 pips, and here's a tenth of a pip, the 5 decimal broker. So here is a representation of what, I guess how I see the market is that if the broker's telling me the spread is 2 pips, I'm picking a bad spread to just accommodate for slippage and all this other stuff. Well, people don't realize how it's just not a precise, you're not getting, and the price is constantly fluctuating. If you hit a buy at the market, you might get filled 0.2 of a pip or a tenth of a pip away from what you see on your screen. And so does that matter? Well, I guess, right, you're off. On a 5 decimal broker, you're actually off on your entry. So if I do a super zoom in here, I'll take you down to the micro level of price here. Now, if you were to write a script that said buy 2 pips above, or buy, 2.1 pips above, it would buy here. And if you hit a button, it would put in buy stops. This is presupposing the market's not moving at the time you launch the script. If this is a 4K, and you said put a buy stop here, buy stop here, buy stop here, buy stop, and this is the ask price. Here's the bid. Now this is what I was talking about. The market is moving underneath your script, underneath the plotter. So the paper's moving, not the pen. So your charts are moving. You have a fixed script that's framed the market in an entry of stops here. I also put in buy limits that are terraced down. I just did alternating colors so I can keep track of 10K in pairs. So we have 4, 6, 8, 10. Ooh, this one's the wrong color. Wait, I fucked that up. This is supposed to be yellow. Why didn't it save that? Anyways, this is supposed to be this color. I think because my background's changed, it striped it out. It fucked it up. I tried to pair it off, but then I put the stripes in there. It changed the background color. I don't know. It's 10K. All the equal size. I'm getting better fill here. Now, this could be a script that you write that's a 20K. It may not fill on the limits. So the market's moving on top of this. Okay, so it looks like this. Now this is static. The script doesn't change. It's just when do you run that? So here's the bid. If I press a button, it's going to come in and launch, depending on how I write it. It's either going to put all these stops in, then it's going to come back and put in these limits. So a potential exposure to 20K of fill. If the market should come up, tag all of these, come back, tag these, right? And then eventually go up. Am I going to be the biggest fucking genius on the planet? Yes, I am. Now, in my stops here at 4 pips, whatever that is. I know that this is 2 pips from here to here. This is 4. So I have a 6 pip stop. The market's dicking around. Now, what if this order lasts all week? Do you think I'll get filled? I do think so. If Sunday night I place a pending order, or I just pull the trigger and pay the ask. So buy one at the market, and I have a stop here. That's a 6 pip stop. I paid this much, which is really 8 pip stop, because I had to overpay by 2 pips. I'm only saying 6 pip stop because, well, if you're going to put the stop in based on bid, it is a 6 pip stop on bid. Okay, that's critical. Now, if you're this close to the market, 10 pips would be, if you're going to pay 2 pips, 10 pip winner is going to be 20% of your cost of doing business. So you better kind of be right about the trade. It's costing you 20% to make that trade. So if you have this stop, then you're going to risk. So you're only going to make. Well, if your profit's based on this, 10 pips off a bid, you're only going to make 8 pips. You're going to risk 6 to make 8. No, I'm sorry, you're going to risk 8 to make 8. So you may think that you wrote put a 6 pip stop to make 10, but if it's 10 from where you got in, right, then you have to take off the what you paid there. So it never looks, it always looks better on paper. Now, of course, if your broker has a 1 pip spread, then you're still you're still paying 10% for your cost of shipping, which is not that great. You're only getting a 50% better thing. But this also, if your spread was here, now it is true if your spread was here, you only have to make to here, but wouldn't your stop be here now? If your stop's still down here, I get the fact that if you get in here, you can take chunks out, but you still have a bad ratio because your stop's down here. So what do you do? Now, I think that when Sunday night at 5 p.m. the market opens and you just get in with a super wide stop to see what happens, and you only make this many pips, or the market only goes up here, should you be selling now? In other words, you're never going to get around the problem of, this is the problem that faces you every moment. Should I get out? Because if you're up on the trade, you should probably get out of something. But if you bought 2 at the market, you could take 1 off and let the other guy go. You could manage to stop and move that, right? You buy at the market, you put in a stop. What if you buy 2 at the market and you have a stop here? Or you buy 1 at the market, you wait 40 milliseconds and buy another one with a different stop. Market goes your way, get out. Now, you're doing this over and over again. If you trade for a living, you play a million. If you play guitar on tour for a living, you play a million places. Some places you fuck up, you make a mistake, nobody knows. It's real time, it's going past people. In fact, what you consider a mistake may not be what the crowd considers a mistake. They may have a higher threshold for, or you may be very picky. You're a perfectionist and you're like, yeah, that wasn't as good as I could have done it. But you're making money, right? Your people are not killing you. They're not throwing stuff on stage. So, and how long does this order last? So if I buy at the market, this is instantaneous. If I put a buy limit here that lasts buy stop here and buy limit here that lasts all week long, is that a good idea? And each of these need their own stops and take profits. I don't know if that helps. I don't know what else to say. It's bad enough that I just can't stay on topic, but I think you see what I'm saying. Nothing going to save you from the work of deciding, is this worth how many trades do I need to do a day? And am I going to try to build a position, or am I going to just what kind of trader do you want to be? I mean, what's if it's comfortable, it's probably not it's comfortable to do something. It's easy to get in a rut. So like playing guitar. Now it's like a chess. When I'm playing with these other people and we're jamming, the problem there is that it becomes like a chess game. There's only so many notes, and now you have to think about different ways to play the same note. So that's what I'm thinking about here. Is the bottomless pit before you of all possibilities of entry. And this could just be one button press that you do this trade here. So if I had a button that I placed that put in, imagine these, instead of these being 10th of a pip, this is like each line here represents 1 pip. Now it's a big deal. All right, now it's a big deal. Because now this is 2 pips. Here's 2 pips. This is probably the most mind-blowing thing about these markets is that this is 2 pips, or is this 2 pips? That's an immense difference. Because if this is 2 pips, then this has to be like 10 pips, 20 pips, 30 pips. Now we're talking real money. I mean, that's a move. From a scalper standpoint, you can make, if your spread is, just under half a pip, now you can look for targets like this with a stop here. You buy the ask. Here's the bid. You buy the ask. You get out. You got a thing here. Okay, this is doable. You're still risking this, right, to make that. You paid this. Your stop's here. So why are people so concerned about, how tight's the spread? Well, because if it's the guppy and the spread's here and you're trying to scalp, you can see how brutal that would be. It would just be brutal. Or are you doing a situation where you throw in, like I was describing about 20 minutes ago, you just have these ridiculous, imagine this is 2 pips, and here's your limits, sitting at 10, 11, 12, 13, 14. You've got limits sitting like this, and you got stops like this. Way the fuck up here for no apparent reason, which doesn't mean this would not be a winning trade. We don't know. I mean, from my standpoint is, I want to buy stop here, not way the fuck up here. I might want to buy limit way the fuck down here. Buy stops here. With exits right away here, and a stop for this entry here. Exits here, stop. And of course, you're still battling. Imagine it's a 1 pip spread. You want to scalp out of that thing. It doesn't mean that this would not be a winning trade if the targets for those tickets were good. Like you have a stop here. Like the master stop on all of these buy stops. There's a master stop connected here. Why can't I draw off the screen? Bizarre. Like it's not letting me draw past a certain window. I don't get it. But this is, so you have These are buy stops all the way to the top of that. And there's a stop connected to that. And that can be, in the script, you could have this, and you could also have buy limits here. So you get stopped out of that. It falls into here. You get picked up on these. And why would you do that? Because you're just bullish. Or you put a stop down here. You're actually going to buy up there. I'll overpay. I'll underpay. I'm bullish all day long. Now, I guess in a bull market, you're going to win. But to me, it's awkward to put a buy stop 20 pips above. I just want to get in here. If I think it's going up right now, because when we get up here, what if this is resistance? I did this bad trade once where I placed, oh God, what was it? I was just lazy, so I hit a button that put in orders, and I think they were in a bad zone. And I thought, well, that's stupid because, there were stops here at this breakout point, and I thought, God, I chased the market up here, and I put the stops were sitting here. I thought, well, that's stupid because this is where the retest is going to happen. So typically a market breaks out, comes back, retests. Or I thought, gosh, I got in here and I looked at those stops and I go, that's exactly where the limit should be. And sure enough, they came back and they stopped me out. And it bounced and then it crushed down. I thought, there you go. That was stupid. So where are you now on the map? So where are you now? And that's a question. Because where are you in that chart? So let's look at a real chart for a second. If I got one up here. I got this chart up here. All right, this has got 50 pip grid on there. So where are you right now? Of course, here's a closing spread of 6 pips. Pretty brutal closing spread. But I don't think it make a difference for me. I'm always going to start buying here. All the way down. I just put buy limits in here. To me, this is always going to be a good place to buy. Up here's always going to be a good place to sell. So for me, that goes without question. Let's see, where is the Zoom key here? Uh-oh. I just crashed the computer a little bit. Too much stuff loaded. Oh boy. Yeah. Not even streaming it, but so here we go. Let's see. Let's start over there. So here's the your classic market. Now, if you can imagine why this is better than order flow is just placing orders in the market. That's what I'd call this. I think I'm running out of memory. So, yeah. So now here's your classic choppy market. There was a trend here for a little bit. See if I can draw inside of here. I still got a little problem here. To wait for I just want to finish this video, but the computer's giving me a hard time, so I'm getting pissed off. Okay, let's pick this area. Is this a top? Okay, is this a top in price here? I believe it is. Okay, I believe this is a top. And we could place a buy order here. God, this is just driving me fucking nuts, this Zoom. This is tracking with my mouse. I can't. I'm gonna have to bail. There's something in the background computer. So here, right? Can we place a buy limit here? Can we place a buy stop trailing above the market as it comes down? Is this a place we could put a buy limit? Is this the stop hunt? Do we buy this? Do we buy this whole pullback on limits? I say yes. And would you sell as this goes up? Yes, I would sell. Will I get stopped out of some of that? Yes. Will I make it back on this pullback? Yeah, you can't drive this fast. I'm driving faster than the computer. Will you make money in that pullback? Yes. Can't you see how this all works out? Okay, I just got to stop the video. Anyways, that's the world of